Good morning, ladies and gentlemen. My name is Simon Taylor. Welcome to episode 76 of the FinTech Insider Breakfast Show from 11FS. In this show, we bring you the brightest and best from around the world of fintech and banking, and every single day, straight to your homes, 8:30 a.m. BST. We are here live on LinkedIn. Today, I am thrilled to be joined by Joanne Dewar.
Dewar? That's good.
Dewar. Sorry, there was phonetic spelling in my notes, and I've completely flubbed it first time. And I had about 15 minutes to ask you before we started. Anyway, Joanne, thank you so much for joining us, CEO at Global Processing Services. And this morning, we're going to be talking about post-Wirecard banking as a service as we enter the new normal. So how are you, other than having people butcher your name on this fine morning?
I'm very well, actually. I'm actually coming to you from Suffolk this morning, where I've actually been spending a few days at my parents' house, so making the most of the post-lockdown extended bubble, and they're now looking after the kids, which is brilliant.
Oh, fantastic. Life hopefully starting to feel a little bit more normal. That's great to hear, as I hope it is for our viewers and listeners. So, I mean, quick recap about sort of everything GPS. Many people will have caught the last episode. We did have you not too long ago, but do you just want to remind everybody the 30-second version of who GPS are? Because you're sort of the best kept secret in fintech.
That's a very kind way of describing us. So we are an issuer processor. So we're a third-party technology provider that is providing the connectivity between fintechs and program managers and the schemes, the card manufacturers, and the BIN sponsors. So we provide that technology integration in the middle.
And I think such a crucial role that so many don't understand the details of until things start to go wrong. And of course, Woe did something to go wrong over the past couple of weekends. We have to come out of the gates talking about Wirecard. Can you tell us a little bit about Wirecard from your perspective? Maybe it's best starting at the role they played versus the role GPS plays, and kind of your experiences over the past couple of weeks.
Yes, so we have a relationship with the subsidiary of Wirecard AG called Wirecard Card Solutions. And I think outside of the industry, very few people understood about that until it came under the spotlight over the prior weekend. So whilst a lot of people talk about Wirecard being a processor, payments processor, actually Wirecard Card Solutions is an issuing bank. It's a BIN sponsor. So it uses its EMI license and its principal membership of Visa and MasterCard to be able to issue cards for fintechs and program managers. They've actually been a dominant player in our ecosystem over many years, and GPS has partnered with Wirecard Card Solutions in the same way as it has with many other BIN sponsors to provide that technology in order to do the transaction processing on behalf of the BIN sponsor. So in the case of Wirecard Card Solutions, actually nearly 80% of the programs that Wirecard Card Solutions was issuing for, we were the technology provider for. Mm-hmm. So we were, very much involved in the exercise that happened over the last weekend, and I saw you presented a fantastic interview that was a debrief with three customers of Wirecard Card Solutions last Thursday, who were also all customers of GPS. That was Curve, Soldo, and FairFX or Equals Card One Banking. So all of those customers we were supporting through the crisis, and for both Curve and Soldo, we facilitated their migrations through to becoming running off their own principal licenses to the scheme.
So it must have been quite a series of days and events for all folks at GPS. And I think it's kind of interesting that, again, the story not told is the people behind the scenes helping those brands make things happen. So as they've migrated from sort of having a BIN sponsor to moving to GPS, what does that mean for them? And have you seen other companies go this route? Because it felt like almost having that BIN sponsor as being the on-ramp for fintechs. And do you think there were any lessons learned coming out of the past few weeks for the fintechs and maybe even for yourselves?
Yes, certainly. There's several parts to that. Firstly, yes, our team was working right the way through the 4-day of the incident as a P1 incident from our perspective, working right the way through multiple nights. And I couldn't thank the team enough for what they've done in partnership with our customers, because, you know, it was not a GPS issue, and yet, you know, we were there to serve our customers and try and minimize the impacts. In terms of the migration over time from fintechs and program managers using a BIN sponsor to becoming a principal member, it's actually something that is reasonably common as fintechs mature and seek to move up the value chain. So it's a very hard thing to start off doing. You have to create, you know, a whole load of capabilities, both in terms of team, but also in terms of the collateral requirements and that kind of thing to get established in that way. But over time, as an organization scales and they're looking to move up the value chain, actually moving to principal membership is something that you see people do. And if we take the example of Revolut, for example, they actually started with PaySafe as a BIN sponsor. They then moved to Wirecard Card Solutions, and then they moved to principal, but all the time, you know, continuing with GPS as the processor.
It's interesting that that's the on-ramp for fintech that is so often not spoken about, and yet people often just hear, oh, so-and-so went down behind the scenes, but they don't understand some of those complexities. So thank you for talking those through. And kind of related to that, you may have seen that Galileo, who's a US sort of card processor, has launched a product called Galileo Instant, which for $1,000 allows you to set up a card program and then is $5 a card. A, what do you think of that product? And B, do you think it's a good thing that more people are building fintechs, or are there some challenges there as well?
I think what's a good thing is for people to be able to learn on the job, to be able to take an idea to market as soon as possible, whether it's actually I'm not talking full market, but just having a proof of concept, or being able to explain to their shareholders or their investors, you know, this is what we're trying to achieve, and test whether there is appetite for it. It does, you know, it's a huge investment in time, money and effort to actually launch a full program. So actually being able to do something as a proof of concept is a fantastic idea. GPS has actually collaborated with a number of organizations under a consortium called Beyond, and that creates an ability to launch proofs of concept quickly as well, in order to, under a single contract, in a similar way, just, you know, low fees, fixed price, just to be able to test the theories.
It's interesting that at a different stage in a company's life cycle, it has a different existential threat. The existential threat when you're sort of very, very young is, will we get enough customers? Does this have product market fit? And what's the lowest cost way I can test that? And products like that seem to really help. But as they get larger, they sort of come into this mid stage that we've, I think, seen Curve and Anna and Solder start to go through, where maybe the existential threat is how they respond to a crisis, and do they have the right partners behind the scenes? And as they get older, it's, will these younger whippersnappers come and kind of eat my lunch? So it's kind of interesting that this speed of innovation is really, really powerful. What do you think about organizations and sort of not becoming incumbents? Because you can sort of go so far into the stack that you spend 80% of your life keeping up with mandatory regulatory, which we see a lot of the big banks now sort of doing. If you look at their IT change budgets, around 80% of it is just keeping up with the change in the infrastructure. How do people manage that challenge?
Well, I guess I'm always going to be the one that says this, but I think it's about how where they focus their time and efforts, and certainly the customers that partner with us. You know, we are focused on the technology heavy lifting. So, you know, we're looking after the next upgrades, whether it's the scheme compliance on the chargeback upgrades or the 3D secure requirements. There is a constant need to develop, to ensure that you aren't becoming legacy, and those demands, and that cash investment is ongoing. And really, the fintech brands, they want to not have to worry about that. They want to just think, do you know what? That is a tin. It works. It does what it says it's going to do. We're focused on the customer, the customer experience, how we're actually going to make money out of this proposition for our shareholders.
It's interesting that for a long time, Silicon Valley has talked about platform businesses, and in the world of payments, its processing at its best can be a platform business. There's more complexity to it than some of that. But startups really understand a platform that I use and interact with. But processing does have its own unique quirks. But I guess there's also, as we follow the life journey of a fintech from sort of small and existential threat being, will anybody care if we build this thing, and do we have product market fit, to how do I scale and how do I expand my business? So what have you seen as you've worked with companies like Curve and Revolut? How are they thinking about expansion, and what do they need to think about to be able to expand, whether it's geographically or into different product lines?
Well, any form of expansion needs more effort. And I think that we are very blessed within Europe with the separate agreements that we've been able to grow pan-European products very easily. But the moment people are looking to shift outside of Europe, it is a different ball game with no harmonization of regulation, and having to establish in each market independently how to get up and running. We've done so ourselves in getting established in Asia Pac with offices now in Singapore and Australia. But even for ourselves, we talk about Asia Pacific, but it's not the whole continent and region. For every market there are certain needs. Now, what a processor needs to consider is what the regulations are with regards to data sovereignty and on-soil processing, and they can provide the main restrictive points. When you're actually bringing a product and needing the licensing as well, it's even more restrictive, and in every market you're having to sort out your own requirements. And then for the US, it's further still state by state, and that's where a lot of people have come unstuck when they're looking at the US as a market, as opposed to working out what they actually need to do by state.
As 51 markets potentially, and more in the sort of the federal level. It's interesting that there have been a number of companies that have made that leap to the US or even to Asia. And I guess as they've done so, there's kind of always different quirks with the markets, as you say. What do you think that the top tips for fintechs as they're expanding are? What are the lessons that from there?
The first is really look before you leap. There's a lot of nuances market by market. Certainly you can see the regulators, I think in all geographies, have looked to what's happened in the UK and the FCA generally, and it's been looked upon as the pioneer and the beacon of what is possible. And loads of countries have been seeking to learn from the UK and replicate it. And we've seen that in Australia with APRA, in Hong Kong with HKMA, in Singapore with MAS. And you're seeing it market by market. They're opening up to what's possible with fintech. Same in Middle East. Certain markets are opening up. I think that is a key indicator of the country's appetite to be able to extend there. And I think the other thing is, you can't make the oversimplifications, the judgment calls that the products that work well here will by definition work well elsewhere. There is innovation happening in every country, and there is a degree of leapfrogging going on. It's not that what the UK has got is better than elsewhere. We've done things brilliantly, but there's some other brilliance in other countries, and what we're now looking at is how we can really mash those sort of best of both together, and that's really exciting.
cross-pollinating the best ideas from different places. You know, the UK may have been a pioneer, but you look at what Australia is doing with open banking, for instance, and it feels a much more comprehensive moving towards open finance, but considering personal data and data protection all sort of baked together in a really powerful way. There'll be lessons to learn from that, I'm sure. And Singapore, with its virtual banking license, has Hong Kong, as you say, hugely exciting time to be in all things fintech. But I guess if you're not a small business, can this be something that works for big businesses too? I mean, is all the fun just for fintechs, or are there big techs out there? Are there financial services companies, banks even, that can take advantage of this approach as well?
Absolutely. So we talk about being the provider for fintechs, digital banks, and e-wallet providers. They're three distinct groups. Digital banks tends to be, not looking to pull the full portfolio of tier one banks, but where they're looking to create. We talk about the speedboats, but the likes of RBS Bow, which we were sorry to see go, but had a lot of potential. There's a lot of small, every bank around the world is looking to figure out what their digital, future is. That's only been accelerated through the COVID acceleration in terms of move away from cash and move further towards, app-based bank accounts. All these themes and trends are happening globally. Then we also just mentioned pre-show, one of our favorite e-wallet providers that we're now working with is Razer in Malaysia and Singapore. Now, Razer, just like another customer of ours, Stowcard, who's started off in Germany but now got a pan-European product, they've built their brand and their customer loyalty and portfolio outside of financial services, and then have created wallets, stored value, and then looking to do something with that. That creates a very different proposition to those that have started from within financial services as fintech. That they are no less fintech, but it's a very interesting alternative to how the competitive landscape may play out over time.
It's interesting that the starting point that you mentioned kind of colours one's perspective of what they want from payments and banking. But it's almost anybody with an audience and a customer base can see how financial services can either get them closer to their customer or solve their customers' problems. And Razer, of course, has a very, speaking to you on a Razer laptop, shout out to those guys, but has a very dedicated audience of fans. But the gaming community is massive. People don't realize just how big it is and how global it is, and how hard it is to for a lot of teenagers or young adults in different countries around the world to deal with their money, to manage money, to pay for things internationally on Visa and MasterCard rails that may not be easily accessible, even though they're middle income earners in their country. And I think that solving customer problems thing is kind of hugely interesting. How do you guys sort of work with fintechs and help them understand the art of the possible, what can be done and what can't be done? Is there a sort of is there an education role you sort of have to play with different businesses depending on where they are in the knowledge spectrum?
Yes, it's informal as opposed to having a professional services arm, but all of our relationships with our customers are based on a deep partnership approach. We're not there to sell a product. We're there to support our partners, our customers on their journey. And the one thing that we've learned through our history is people come with a request. They think they know what they want. They have something that they want to deliver. But 2-3 years down the road, that's going to look very different. And what part of one of the keys to success of our partnership approach has been that we recognise all of that up front. And whether it's our support or our pricing structures, that's all there to be able to support the customers for the long term, and that's why no one ever leaves us.
That's a great way of putting it. That's a tagline for the company. Never jilted at the altar, GPS. But I do think though there's something interesting as we look back at the sort of 11 years plus now, the nearly 12 years since the financial crisis. We saw a wave of fintech coming out of that, but it feels like around the world there are different waves of fintech at different stages. What do you think sort of coming next for fintech? What are you starting to see? Are there emerging trends? I don't know, there are emerging things that are exciting you guys at GPS.
So yeah, we kind of sit as the incubator of the next generation of fintech. So we've got a lot of people working with us, pre market launch. What we see right now is that there's a number of next generation fintechs actually founded by individuals who have got fintech experience now, which so that is the next wave that creates some additional credibility. So you've got Mark Hipperson at Ziglo, for example, who was prior CTO at Starling Bank. You've got Ricky Lee, founder, who's setting up Sync, that's launching, I think, later this month. He was one of the original team at Revolut. And so, that real experience of thinking, right, if I was to do this again, what would I do differently? What would I do better? And, they've got the credibility that's getting the deeper pockets of backing from earlier stage as well, which is, so that's one thing that's interesting. We've just mentioned about the e-wallet providers and, that fact that coming with an instant loyal customer base is going to be really interesting to see how that disrupts the market. And then finally, continuing to see how the larger traditional banks respond, because there are a couple of success stories, but not enough yet. And I think they will. It's very hard to generalize, but I think we'll continue to see movement in that sphere as they try out more permutations. I think they're not going to sort of put all their eggs in one basket, but certainly the larger traditional banks are well equipped, well funded to be able to sort of back a few different horses and see what gains traction.
Absolutely, and there are ways to do it, and I love that point about sort of this second generation of innovator and fintech founder that's coming along and wanting to do it differently. Silicon Valley is known for having this generational compounding effect of entrepreneurs and capital. Maybe we start to see the same thing in fintech. There's a good question here from Nick Carrigan, who's watching along. Thank you for joining us, Nick. Good to hear from you, my friend. How do you see Razor in particular thinking different about financial services? And if I may add to that as well, how do you see companies like Razor sort of interacting with the world of banks? Because does the role of banking change to support these guys, or is it to compete with them? I'd love to play with that. But firstly, what is Razor thinking differently about? I think you mentioned they are thinking about, they've already got a customer base, but is there something specific as well that you can mention?
Do you want to work out how much I can actually mention at this stage? So, I mean, it's public information that, they've been looking to see what they can do to provide what they call the world's first youth bank. So they recognize their customer segment. They recognize that they've got huge brand loyalty. In fact, when we were talking to them the other day, they said, well, how many other brands can you think of where people get tattoos of the brand? So they've got huge customer loyalty. They've actually got, whilst they're simple based, they have got a global footprint of users. As you say, you've got a Razor laptop there yourself. So they have that strong brand association and loyalty. But their principal revenue source is actually outside. So they're not necessarily having to go into financial services as their path to profitability. They already have a profitable business. So what then gets, interesting, and it's where I start to sort of put conjecture on as opposed to knowing what their plans are. But, they have the opportunity to really play a role to help people understand and manage their finances, without necessarily having to make it the big profit center for them.
That commercial objective being different is hugely powerful. I think in the last earnings report, Apple noted that 23% of their revenue is now coming from services, and then the previous quarter is 20%, and the previous quarter is 17%. and Apple Pay and Apple Card is seen as a big piece of that. But this is almost different. This is using sort of the brand affinity to, yes, generate a portion of revenue, but that's not the only goal. It's not the only thing they're there to do. And it's often in markets where interchange is a little bit different to Europe as well, versus in the US, where under the Durbin Amendment, interchange looks kind of quite different. So I guess those different perspectives definitely shape what people want. And I guess where I was going to lead that to is, do you think that the sort of the nature of more fintechs coming into the market is going to be a good thing for consumers, more brands coming into the markets? And how can banks respond? You mentioned briefly that there's a few success stories. There could be more. How can banks respond? And do you think this wave of innovation is going to keep coming from the bottom end and from the brands?
I certainly the wave of innovation is continuing. I think, much like if you look at football, you have a few football stars, and every 9-year-old wants to become a professional footballer. The more the unicorns have established great things, the more there is a plethora out there. The danger in that is that there isn't necessarily space for everyone, but actually the investors are getting a lot pickier right now, and so that will help sort of weed through and ensure that the consumers are protected with having credible products out there. In terms of the response of the traditional banks, I mean, there is no way of holding back or stopping. They're just going to have to sort of keep trying alternate ways of doing things. I know, there's lots of commentators out there with lots of views as to how things should be done. The key is not to do nothing. They have to. And there is no value in doing a 2-year study of what should be done. They're really best off just having a go. And what they shouldn't do is underestimate the power of, the value of, the ecosystem, partners like ourselves who can actually do some of that heavy lifting. We can equally heavy lift for big brands as we can for fintechs. And that means that they're able to focus on, right, what does it actually look like from a customer proposition perspective? And I think where historically, the traditional banks have looked upon fintech and thought, well, do we, they're not a threat, then are a threat, then we'll go and buy one of them and integrate them that way. But they're such different beasts; they don't really sit well together. So I do think the traditional banks are going to have to, come up from within. With the digital props as opposed to just buying. But I think there's more for them to learn in terms of how the ecosystem can actually facilitate their progression as well.
I love that point about where banks start is often kind of, they don't realize that somebody else can do the heavy lifting, especially when it's sort of, oh, but we already do some of this processing, surely we should keep doing this processing. But it's a 2-year integration path, and actually there could be quicker ways to do it.
There's certain things that obviously banks are going to be very precious about, not least where the money's held, where the risk and compliance and that side of things. They absolutely want to keep in central to their organization, but that doesn't need to encompass everything.
Joanne, we are up to the hour, so I want to thank you so much for joining us. Where can people find out more about you and what you're doing at GPS?
So I'm out there on Twitter and LinkedIn. Global Processing Services is globalprocessing.com is our website. Please do get in contact, and we'd be happy to hear from people.
And that is all we have for today. I'll be back tomorrow with Alex Reddish, who's Chief Commercial Officer at Tribe Payments. We've got a payments theme this week. We'll see you same time, same place tomorrow. Have a great day, everyone, and please stay safe.